What's happening, everybody? Welcome back to the channel. We got some key data in today that's impacting crypto a little bit. Not so much yet, but it certainly impacts the grand scheme of things as it relates to inflation. So there are a couple key things that we look at, and one of them, the data was released today on it. I want to break it down for you in this video. What came out today was the PCE data, and that index right now showing a lower inflation level than CPI. Now, this is in part because rents, which have been among the biggest drivers of inflation, carry twice the weight in the CPI that they do in the PCE data. Now, going back to the top of this article, let me take you inside here. Let me put myself over here on the right-hand side. There you go. And you can kind of see that a little bit better. We'll zoom in here and check this out. So the Federal Reserve's favored inflation gauge slowed sharply last month, an encouraging sign in the Fed's year-long effort to cool price pressures through steadily higher interest rates. Now, there's some debate here, like whether the Fed should just go ahead and rip the Band-Aid off or, just continue on with these slow rate hikes. You can make an argument on both sides for that. Friday's report from the Commerce Department, though, showed that consumer prices rose about 0.3% from January to February. That's down about 0.6% from December to January. So, and if we look at that year over year, prices rose about 5%, slower than the 5.3% annual increase in January. Now, when we take out food, volatile food and energy prices, the so-called core inflation data rose about 0.3%. Okay. Both were slowdowns from the previous month. The Fed is believed to pay particular attention to the core measure. That's the measure they really focus in on the most as the main driver, the main gauge of underlying inflation pressures. Now, taken as a whole, today's figures show that inflation pressures, though easing gradually, still maintain a stronghold on the overall economy at large. And the Fed, of course, has raised its benchmark rate 9 times since March of last year, which is insane. And this is obviously to try to fight inflation, which is running rampant, the highest inflation we've seen in the last 40 years. 4-decade high. So the Fed's policymaking has been complicated, of course. Now, what we had happen recently even further complicates the issues. That's the collapse of Silicon Valley Bank and Signature. This is the second and third largest bank failures in U.S. history. So now all of a sudden the Fed's like, oh, well, if this is happening, we've got to do something. Because if you remember, a 50 basis point raise was kind of on the table there for a while until the banks collapsed. Then they kind of dialed it back and, went 25 basis points. Again, kind of kicking the can down the road as it relates to fighting inflation here. So the central bank now must consider the risk that its continuing efforts to cool inflation through ever higher interest rates could further destabilize the banking system. Here's what I think in terms of the banking system right now, my 2 cents. I'm not going to go out there and say I'm a banking expert, but I think like everything else, it's going to consolidate. And in the banking sector, you've got the big 6. You've seen it in every sector in America. Eventually, everything consolidates to the big players, right? Walmart swallows everybody up. Amazon swallows everybody up. And I think in the banking sector, JP Morgan, Chase, Bank of America, they're going to swallow everybody up, just like everything else. That's kind of what I see happening. And I think it's already been happening. But during these tough times, these regional banks, they just can't survive, guys. So again, the PCE data came out today. The index shows a lower inflation level than CPI, which is good. In part, that's because rents, which have been among the highest drivers of inflation, carry twice the weight in the CPI that they do in the PCE actual index. Again, these are different data points, the PCE, the CPI, and the jobs report. That's what comes out every month. And we pay pretty close attention to that, especially during times like this. So appreciate you guys. As always, real quick, we'll hop over and take a look at Bitcoin. Bitcoin's actually on the move a little bit here today, 28,600. We have been above 29,000. Let's see this weekend if we can get back up there and maybe, just maybe, go up and touch 30K. That would be a huge psychological level that we can reach. That would definitely turn some heads. We'll see you in the next video, guys. Appreciate you as always. Take care.